Good afternoon. We spoke to Mr. Hiren Ved earlier today, the CIO, CEO, and the co-founder of Alchemy Capital Management. He had some very interesting views with regard to why the broader market is trailing the large cap universe. He believes that over the last 2 months, the broader markets have really outperformed the large caps, and now it is time for large caps to play catch up while the broader markets to correct a bit. And he believes this is fairly normal in a typical bull run. We also spoke to him with regard to a range of sectors from IT to FMCG. So let me try and cover some of those. With regard to the IT sector, he believes that the sector is in a structural bull market. While companies across the board are raising guidance as well as margins are also increasing, a lot of these trends are due to how COVID has accelerated digital in a big way, especially B2B digital. The sector though is facing a couple of major challenges with regard to attrition. There is temporary pressure with regard to hiring, as well as there are larger bonuses being paid out. But typically across the board, margins have improved by 2 to 2.5% EBITDA margins, which augurs very well for the sector, is what he believes. With regard to FMCG, especially consumer tech, as well as the traditional consumer companies, he believes that the challenge that these companies currently face from a buyer standpoint in the stock market is that these companies are slightly on the expensive side. On the consumer tech side, he believes that there are 3 main catalysts to really good growth. One is that, or really good returns. One is that the company sees hyper growth, right? Second is a very good return. And third is a very strong corporate governance. Now, he believes that some of these companies, especially in the consumer tech space, are lacking in terms of returns or profit or cash flow. This is what he believes makes the pricing of some of these companies slightly on the higher end, and he believes that waiting or timing the market while these valuations become slightly more reasonable would be a sensible way of playing the space. With regard to pharma, he believes that the current quarter saw a huge drop in with regard to margins, which means that the sector is really in a struggle kind of a mode. But he believes that API and injectables both are very good plays in this particular market, including specialty chemicals. So API, injectables and specialty chemicals. And even within these sectors, the export or the China plus one strategy, companies following some of these strategies will be aided furthermore. Now moving on to the ethanol play and his views on that one. He believes that currently the world is moving towards biofuel and sustainable energy. So the government as well, the Indian government as well, is pushing towards that space, as well as with regard to hydrogen fuel. So what he believes is a lot of the sugar companies are actually transforming into energy companies. And eventually, most of the sugar companies will transform into energy companies, leaving sugar as more of a byproduct, right? He also believes that India has a unique opportunity with regard to the food grains it has in store, right? And it can actually utilize some of these food grains in the same ethanol play, which will be an extremely interesting space to look at. And he believes that this is just the beginning of biofuel and ethanol based energy. With regard to metals, he believes that the cycle is definitely not over, and there has been a structural shift in metal companies. So with regard to the Tata Steels and the JSW, he believes that there has been a structural shift which not a lot of market participants are talking about, and not a lot of market participants are noticing. He also believes with regard to the reopened trade that several sectors will benefit. There is real estate, he believes, which has been quiet since a very long time, which may really get a push given reopening. Banking as well, he believes, is a very good reopening play, especially with regard to digital banking, where all financial services companies are going to benefit from the push that reopening is going to give them. He believes that Bajaj Finance and ICICI Bank are two great players in the digital financial services space, and they have a huge legroom to play with. He also believes that Trent, V-Mart and Avenue supermarkets are great places to be in terms of the reopening play. Retailers and QSR, he believes, are a good place to be when it comes to revenge or vengeance buying, which he believes will happen. Lastly, with regard to the semiconductor crisis and the major player there, which is the Tata Motors and the Maruti Suzuki's. With regard to the semiconductor crisis, he believes it won't last for more than a quarter or two, and there is semiconductor players are working at a war footing with regard to manufacturing of the deficient parts. Right? There is a huge demand. There is no doubt about that. All players have been speaking about it, and he believes the EV leader, which is Tata Motors, has the most to benefit from this particular play. He believes that the Tata Motors restructuring has been excellent. He believes that the company, due to the semiconductor crisis, may take some time to play out. However, if investors are able to live with this uncertainty, it's an absolutely great time to invest in Tata Motors. Thank you.